Last Friday, $1 trillion of chip stocks evaporated in a single session. The worst Nasdaq day since April 2025. The worst chip day since 2020. So which one is this? A correction or the start of a crash? The data has an answer. June 1st. The S&P closes at a record 7,600. 2 days later, Broadcom reports earnings. Revenue up 48%. AI revenue up 143%. A record quarter. And the stock dropped 14%. Why? Guidance of $16 billion missed the whisper number by $1 billion. That $1 billion gap lit the fuse. Friday, June 5th. The Nasdaq falls 4.2%. The chip index drops 10.3%. Micron, down 13. Intel, down 11. AMD, down 11. Nvidia loses $740 billion of market cap and briefly gives up its $5 trillion badge. Palantir now sits 34% below its high. And today, Supermicro fell another 23%. Then the macro made it worse. May inflation just printed 4.2%, the hottest since 2023. Markets now price a 96% chance the Fed's next move is a hike, not a cut. And overnight, U.S. airstrikes inside Iran pushed oil above $94. Rate cuts are dead, and expensive growth stocks hate that math. Now the bear case. Big tech plans to spend $725 billion on AI infrastructure this year, up 77%. But enterprises only spent $37 billion on generative AI in all of 2025. Bain says AI needs $2 trillion in new annual revenue by 2030 and comes up $800 billion short. And an MIT study found 95% of corporate AI pilots return nothing. That is a spending gap with no precedent. And the bubble echoes are loud. 10 stocks are 41% of the S&P, the highest concentration on record. Bank of America's Michael Hartnett calls it, quote, so bubbly. Wall Street's long-term earnings forecasts just passed their March 2000 peak. Michael Burry is short the chip index, claiming the hyperscalers understate depreciation by $176 billion. And Nvidia investing in customers who buy Nvidia chips has a name. Circular financing. But here's what the dot-com bubble never had. Earnings. Nvidia just grew revenue 85% to a record $81 billion quarter. Jensen Huang says $1 trillion of chip orders are already visible through 2027. Microsoft's cloud backlog alone is $627 billion. Combined, the big four clouds have $1.6 trillion in contracted backlog. That is not hype. That is signed paper. And the valuations are not March 2000. Cisco peaked at 200 times earnings. Nvidia today trades at 22 times forward earnings. Cheaper than the average chip stock. The Nasdaq trades at 26 times versus 60 in the dot-com peak. Over the past year, Nvidia's multiple compressed 30%, while revenue grew 85%. Bubbles do not derate while earnings explode. So correction or crash. History keeps score. The average correction falls 14% and recovers in 4 months. Only 1 in 4 corrections ever becomes a bear market. And the dividing line is almost always recession. No recession, markets average a 22% drop and bounce within 6 months. With a recession, 35% down and 20 months of pain. The dot-com crash took 78% and 15 years. The difference was not vibes. It was earnings going negative. Where are we now? The Nasdaq is about 8% off its high. Not even an official correction yet. It still sits above its 200-day moving average. Earnings are still growing. There is no recession on the board. The data says correction. But watch 3 things. The Fed on June 17th. Oil and the Strait of Hormuz. And whether that $1.6 trillion backlog starts getting canceled. Those flip the answer. Volatile weeks are when positioning matters most. Apex Exchange. Stocks, crypto, commodities, and prediction markets, all in one place. Live order books. Real depth. 24/7. Hedge the chaos or trade the bounce. Use code FF50 for 30% off fees. Link in description. 18+ only. This video is sponsored content. Trade smart.